What do you make of this deal, and especially what do you make of the concerns that this sort of increases the circularity between OpenAI and all of its vendors and the relationships between all these companies kind of financing each other?
Sure. Good morning. I think before we talk about the suppliers, it's important to understand that OpenAI is eating computing power like Pac-Man. They have 800 million weekly active users, probably getting to 1 billion users by the end of the year. And this is within 3 years of them forming. It took Facebook 8 years to get to 1 billion users. And every one of the users that OpenAI has on their network is consuming tremendous amount of tokens and computing capacity. So the company has to build out a lot of infrastructure, which it is doing with the help of cloud service providers. And for that, it needs to partner with these leading semiconductor companies. Today, NVIDIA is the incumbent. OpenAI has signed deals with Broadcom, and now it has signed this deal with AMD. But it's also important to realize, second point, that OpenAI is going to be one of the many ecosystems that develops in this AI industry, right? There's going to be an ecosystem developed around Meta or Amazon or Google, right? The many different neoclouds that are forming. So this is going to be a broad, diversified industry with chip makers participating, which is why we are not as worried about the circularity of this, because if you look at the total of the deals that OpenAI has signed with NVIDIA and AMD, they will probably end up being less than 5 or 10% of the overall deployment. So no, we are incredibly bullish about this build out. And I think companies like NVIDIA, Broadcom, AMD, and others are very well positioned to take advantage of it.
Yeah, the strategy, to your point, does appear to be as much a land grab as it is about a financial decision. And, your point about Meta and the other ecosystems and the other companies competing in AI, do you think OpenAI has, with all these deals, really made it harder for these other companies to get compute and to get the gigabytes they're going to need for all the power and all the compute power?
Sure. So I do think that the constraint in this industry is not going to be chips. I think it is going to be power. It is going to be the build out of data centers. So I would agree with you there. But many of the companies that are competing against OpenAI, these are public companies. If you look at their capex today, it is still only 70 to 80% of their operating cash flows. So they're very well positioned to fund a lot of their deployment through operating cash flows. Capex intensity is much higher. Used to be 10 to 15%. Now it's closer to 25%. But their cash flow from operations is over 30%. So they're well able to fund this. OpenAI does have to go and look at private sources to fund its build out. But what we find very exciting and fascinating about what's going on in the industry is that OpenAI is the most disruptive of these entities. So as OpenAI goes and disrupts or has the potential to disrupt business models, whether it's in social or search or e-commerce or shopping or other areas, I think that really motivates, it acts as a force multiplier to make others accelerate their deployments, which, as I mentioned, is incredibly positive for the semiconductor industry.
Hey, Vivek, I'm still trying to decide or get my head around these two deals, the deal that OpenAI cut with NVIDIA a few weeks ago versus the deal they just cut with AMD. Which is better, to give away 10% of your company to get to be a partner, or to give away $100 billion to get a stake in OpenAI? And was the deal for NVIDIA only available to NVIDIA because they're the dominant player right now?
Sure. Becky, I think if I look at what OpenAI has said publicly, it is their intention to deploy over 200 gigawatts, actually more like 250 gigawatts of computing power by 2033. If you look at the total of the deals with NVIDIA and AMD, it's 10 plus 6, it's only 16. So it's like 6% of what they have announced. So my point is that I think this is just the tip of the iceberg. If OpenAI is able to execute on its ambitions, there are going to be significantly greater demands for computing in its network. So that's why we think that
which is a better deal for NVIDIA or AMD shareholders? Would you rather be a shareholder in one or the other based on those deals?
Yeah, NVIDIA has a much stronger balance sheet. They're generating 100 billion plus a year in cash flow. So they can go about structuring these deals in a very different way. Whereas for AMD, a lot of their balance sheet has gone into making prior acquisitions. I mean, they do generate cash, but their balance sheet has gone into making acquisitions, and now it is in investing in their own infrastructure. So I think it's a difference between where these two companies are coming from with respect to their balance sheets also.
And Vivek, just one last question. When Lisa Su took over this company back in 2014, its market cap was $3 billion. Now it's over $330 billion. A lot of that was because she bet on inference, that instead of using chips that train the models, that they're really using inference to train specific tasks. Do you think that there will be, or is there a risk of yet another disruption in the types of chips or the types of training that are popular in AI? Or do you think it's going to be inference from now on, and there's little threat to the technology bet that AMD has made here?
Absolutely. And I think we have to give her tremendous credit. When she joined, to your point, the stock was less than $2 a share. Now it is over $200 a share, right? So remarkable progress under her leadership. When it comes to training versus inference, I don't think one can do, training very well if you're not good at inference. Almost all of OpenAI's training and inference is done on NVIDIA chips. So you have to be good in both. But it is true that over time, inference is going to be a bigger part of the workload. So I think you have to be good in both. AMD's traditional role has been to be much bigger in inference. I still think they are going to be much bigger in inference. But you have to also show that you can do training very well. So I think they will find opportunities. But today, NVIDIA has the majority of the large language model training market.
When I talk to Lisa Su, she remains incredibly humble. She will always put herself in the shoes of someone who is a partner who is not going to hurt Jensen. It's not going to happen. She thinks that she's got something. She actually recognizes that her multiple is pretty high even versus NVIDIA. But it was a huge win for her. And in the end, what we're talking about is her chip better on a price basis? And the MI 450, I think is, but we got to speak to Jensen. Jensen, by the way, Jensen's another guy. Remember, he's a lover, not a fighter. He's going to tell you that immediately. Although he did tell me once that he felt that Mark Zuckerberg was a fighter. I want to see what that conversion's about when we have our special today. But I think there's room for everybody. I just really do. I think it's the railroads in the 1870s. There's room for more than one rail.
But you did just say some of these correction levels are because there will be losers.
Well, we got to see what Amazon's going to do. I mean, I thought this Anthropic, IBM could be more. They're affiliated with the Anthropic. I thought that might redound more to Amazon stock price. Amazon stock price can't get out of the way. I think a lot of what Sam Altman and OpenAI are doing is an attack on Meta. When I say attack, I mean, yes, they're looking at what Meta could be, and they're saying, listen, we can do this. And look, I have been saying over and over again, this is the year of magical investment. Now, I say that to counter the bears who have been so wrong and yet still keep showing up. Remember last week, all we heard about was that, what's going to happen is that Jensen Huang is giving OpenAI $100 billion, and they're going to give orders to No, they gave the orders to AMD, for heaven's sake. Why can't we just say that? He gives them $100 billion, they give an order to Lisa Su? I mean, to me, it's rude.
Depending on how the warrants work out, some desks were playing with the possibility that NVIDIA could own some AMD in the end.
Well, that would be... Well, when we used to have antitrust, they would have been furious.
Right.
Oh, no, we still got that. I think that he can come up with an analysis that would say easily, this just shows how big things are, that if it was just him, maybe it wouldn't be. I think you actually need others because he can't make all the chips that everybody wants.
That's the whole point, right? That's the whole point about that chart.
Right. OpenAI needed more chips because Elon Musk wants everything that they have. Elon Musk does. He has this list of pals that he talks about, people whom he really is close to. And Mark Zuckerberg wants everything, and Satya wants everything. And I think that you can't get everything. I mean,
so NVIDIA plans to invest in OpenAI, which is buying cloud computing from Oracle, which is buying chips from NVIDIA, which has a stake in CoreWeave, which is providing AI infrastructure to OpenAI, right? You come all the way around the circle. AMD did their thing yesterday, right? That stock's higher yet again today. That stock just exploded higher yesterday as well, which only adds to the conversation about whether there's this massive bubble brewing in this space.
I think it's legitimate to ask the question. I don't think we're going to be able to answer it right now. To me, just based on history, being in the markets, being in business, this feels a little bit like it rhymes with the late 1990s, but not with 1999, more with 1997. I don't want to be blasé, but that's just what it feels like. Now, why do I say that? Because this circular revenue stream, which is a good way of describing it, at all stations along the arc does seem to have a positive ROI, return on investment. Yes, there are questions today. Let's face it that they are rumors, but they are questions about the degree of profitability, but we're not talking about losing money at any point along which this circular money travels. I am a believer in the velocity of money theory of economic growth. I mean, it's a take on Milton Friedman. It's usually applied to the economy at large, but I think we can apply it to the AI ecosystem, given how important that ecosystem is to the economy at large. And as long as this money is flowing and making profits along the way, which it is, we should be fine. Now, for a case like Oracle today, all right, here's a stock that's trading in the mid-40s as a forward earnings multiple. It's up 120% over the last 6 months. It's susceptible to have some air let out of the balloon, as Josh just said. I think that's a good way of stating it. You let a little air out of the balloon so it doesn't pop, and it actually sets up for the balloon to be expanded further down the line. What I'm saying here, just to summarize, feels like 97, not 99. Go ahead, Josh.
You want that skepticism. Thank God they're writing articles like that.
Agreed.
You want that because in the absence of skepticism, this thing goes parabolic. You're at like a NASDAQ 30,000, Dow 65,000. That's not a good outcome for anyone. And so far, as bullish as people are, we've staved off that particular concern that I would definitely share if we were doing that in markets. But the reality is not that. And when people point out things like IREN and CoreWeave, I just default to saying, look, man, these are not the biggest market caps in the stock market. They could get cut in half and the market could survive.
Let's put it another way, taking what you're saying. I mean, Oracle right now, 40 times forward earnings. When the bubble in Cisco hit, it was 120 times earnings. By the way, I looked the other day at eBay. I think that's one of your favorites. Back at the same time, it was 400 times earnings. That's what bubbles look like. Now, the 40 times is projected to go to 24 times for Oracle over the next 2 years. That is the question. Does OpenAI raise the funds, whether it's revenue or investments, to actually make all this cash come through the circle? That's the question that has to be answered, and it can't be answered by me or anyone, not today.
Let's bring in Christina Partsenevelos, who can add some insight, perhaps, and she follows the space obviously so closely. What do you make of this information report, which is having a dramatic impact on several stocks? Look, it's caused the NASDAQ, which is now down 0.8% on this news.
I think it's interesting the news comes out the week before Oracle's hosting their big analyst day on Thursday, which for sure, this is going to be a question, right? Specifically, margins on these chips, margins compared Blackwell versus Hopper. We know that Blackwell is the more expensive chip. And so the overarching theme for this piece is that renting these chips may not provide the greatest ROI that we initially thought. But this is just one story, right? One source. Oracle declined to comment so far, and my assumption is that they will have something to share next week. Whether it's good or bad, we don't know. But the other thing I was thinking about, you guys are just talking about leverage, right? Oracle stands out from the other hyperscalers given the amount of debt that it's had to take on in order to build these data centers and provide the rental. They were very oversubscribed. The proxy showed that. A source close to the deal also told me that. So clearly there's appetite. It's just, is the appetite warranted when you're taking on that much leverage? And then that also equates to CoreWeave, Nebius. These are highly levered companies. And so that's, I guess, throwing in the concerns across the board, but there's no shortage of appetite for this.
Christina, thanks. It will continue to follow because it's a market impact story. There's no doubt about that. There was an FT story out today which pointed to the enormity of the deals that OpenAI has already signed this year, $1 trillion. Which they said raises questions about that company's ability to fund those. They had an interesting chart about, again, all the companies that they have done business with. It's why an analyst like Stacy Rasgon yesterday on this network regarding OpenAI, there's the chart we're talking about, regarding OpenAI and Sam Altman, quote, has the ability, I think, to either crash the global economy for a decade or take us to the promised land. We're not sure of which. I thought that was interestingly put. by Rascon, who follows the chip space, as you know, NVIDIA, AMD, and all of the Broadcom and all the names that we focus on so often. What do you think?
I love the way he put that, and it really forces you to think, is it that extreme? And where I'm coming out is, I don't think it's going to be either that extreme, but when he says, can it break the global economy, we have to acknowledge, and you between your CNBC story and the FT story, you just see that there's capital misallocation, right? And it's not everywhere, but there are pockets of massive capital misallocation. And to Josh's point,
you're making a declarative statement that we don't know that there is.
Oh, we know that there is. You know why? Because every past technology boom in something new, there's capital misallocation. We don't know where it is. I'm not saying it's broadly misallocated, but there will be. We will reflect back and say, investors put money in the wrong stocks at the wrong time in huge amounts, and we'll say that companies built out projects that shouldn't have been built out, and then that they underbuilt things. So there's some degree out there of money that's going to the wrong places. I think we can't underestimate the extraordinary impact that AI is going to have on our lives collectively. And that's enormous. And when it's this big, and to me, this feels far bigger than the internet. At least, I lived through that .com boom and the development of the internet. This feels bigger in terms of what it's going to do to change my lives, my kids' lives, all of that. So when we think about that too, it's exciting, but it's also disruptive. And as we sort through this disruption over the next 3, 5, 10 years, parts of Stacy might end up being right, where there's parts that are derailed, and parts might bring us to the promised land. So it's just a tough time. It's tough to commit to anything. Josh was saying, I'm not going to be the one who tells you exactly how it is. That's the smart answer, because none of us can. None of us will. But I will all day say capital's being misallocated. Just at this moment in time, we don't know exactly where those misallocations are.
Let's take a look at
a slight chink in the AI armor has stopped the market's record run this Tuesday afternoon. The vulnerability, and we stress slight because so far it's just a report, it involves AI cloud computing giant Oracle. Shares are well off the lows right now, down 2.8% to $283. But earlier they went as low as $271 on a report by The Information indicating that in the most recent quarter, Oracle lost nearly $100 million from its NVIDIA chips rental business. Citing internal company documents, The Information said Oracle actually lost close to $100 million by renting out NVIDIA's most sophisticated Blackwell chips, and saw thinner margins than Wall Street was expecting. Now, we put in a call to Oracle. They are not commenting, but sources familiar with the situation tell the Clayman Countdown the report is off base and does not reflect the actual financials of that business. Oracle, by the way, year to date up 69%. So any stutter, though, in the AI narrative, which has driven this year's market gains, is likely to cast a pall over the major indices. That's kind of what we have right now.
Jim Cramer held his monthly investment club meeting, and a rather special guest joined. That is NVIDIA CEO Jensen Huang. In addition to meeting club members, Huang also talked to Jim about his partnership with, you guessed it, OpenAI.
This is a partnership that for the first time, OpenAI is going to buy directly from us. Usually a cloud service provider buys from us and they rent from a cloud service provider. And so now it's going to be a direct partnership. We're going to help them build an AI infrastructure that they operate themselves and really set them up for 5 years out when they're going to operate their own cloud anyhow.
See, there you go, Tim. He said, set you up 5 years out. Is there anything to what I'm saying, or is it just total nonsense that all this stuff that's happening right now is for 5 and 10 years out? There's no way this pace can keep up.
Well,
maybe there is.
Not only all that we do is talk about a bubble. By the way, Yardini, who's been doing this a long time, I don't know, maybe someone else said this, but he said we have a bubble in bubble talk, which means actually things are okay. But OpenAI, $1 trillion of deals. As you said, we've put it all on the table now for a company that won't be profitable probably till the end of the decade. The thing around NVIDIA is, if this was 6 months ago, one of the questions for investors was, what does NVIDIA do with all this free cash flow they're generating? How are they going to be reinvesting? Well, there's no question we've gotten our answer in the last couple weeks. They are an AI infrastructure company, and they want to be the bottom line de facto. Couple great reports out there, one by Piper that also headlines this. I think this is part of both the excitement and the challenge about investing in NVIDIA here, because people have that concern.
All right, today the CNBC Investing Club held a meeting with Jensen Huang, the founder and CEO of NVIDIA. Jensen was gracious enough to field questions and take pictures with club members. He was something. It was a terrific, non-cynical, non-nihilist session where he dazzled us with insight, but also won us over with kindness. If you were there or you streamed it as a club member, you most certainly feel better about the competition from AMD or the resilience of AI data center spending for the hyperscalers, or worries about how much Oracle may or may not be making on an NVIDIA platform, or just the future, how great the future could be. There were so many terrific stories told about people who bought NVIDIA for next to nothing, many of them when I renamed my dog NVIDIA back in 2017. We had tales of regular people who watched and made hundreds of thousands or even millions of dollars. When I sat down afterwards to think about what to say tonight at the top of the show, I realized that the contrast between today's trading versus the long-term investing on display at that meeting is so stark, we got to deal with it head on. First, there are plenty of people who haven't made money owning NVIDIA, and I wish they had. There are plenty of people who haven't made money in the stock market at all. I don't want you to think that a group of 76 CNBC Investing Club members who wanted to meet Jensen Huang are somehow representative of the average American investor. They're clearly not. These are people who own NVIDIA and didn't trade it. Their fortitude is what allowed them to win. They heard bubble all their existence. From the moment they bought this stock, they heard bubble. From the moment they bought it, they had billionaires telling them to sell. But they wanted to make money, too. They wanted their piece of the American dream. I have no illusion. I pick clunkers. I just have a better handle on the risk control situation. But the people today, I'm talking about wonderment. Second, and more important, I'm sure some of those people bought NVIDIA on a down day like today. Maybe they got picked off at the high and they finished the day down a couple of bucks, but the natural experience in the market is to lament, be angry, and even give up, and these people didn't. The people in the room stayed. They could have even bought more on weakness. Why? Because, you see, they had faith in two things. They had faith in the stock market and the faith in NVIDIA itself. They understood, which you could say is an extension of Jensen Huang, obviously. They understood that it's possible to make big money in individual stocks, but it does come with risk. You can control some of that risk by accumulating stocks gradually instead of all at once. That way, if we get a reversal day like today, that's just a better entry point for your next purchase. More important, though, they had faith in Jensen. They had faith in Jensen Huang and NVIDIA. When I listened to Jensen today talking about NVIDIA's long-term plans to power the fourth industrial revolution and how NVIDIA is going to augment the entire world's GDP because its customers have so many lucrative plans for its technology, it makes me want to buy more for the charitable trust, even though we're already up more than 1,000% on this one. And if we added back the stock that we sold because the stock had gotten so big, well, we would have been up well in excess of 1,000%. Oh, okay, I found myself not worrying about China sales, even as you don't need to in the first place, because Jensen's not including anything from China in the numbers. I didn't worry about a story about how Oracle might be losing millions of dollars on NVIDIA's chips because they ran out or whatever, because the chips are really a small part of Oracle's grand plan to dominate the world data center, and the story was therefore, I regard, as inaccurate. I didn't worry that NVIDIA's nearly $4.5 trillion market capitalization had gotten ahead of itself. Any stock can go down at any given time. Of course, I always worry when a stock goes up as much as NVIDIA has, but I've seen oil stocks and cell phone stocks and software stocks and drug stocks crawl to the top of the heap, and I was concerned about those too. Stocks are risk assets, so if you're not concerned about risk, well, then you're in the wrong business. All that said, what matters to me is that I've learned to trust the market in general, and NVIDIA in particular. Jensen Huang has earned the benefit of the doubt. That's what's happened. That confidence, that gives me confidence to buy more of NVIDIA if it goes lower. That's how I view every stock in my charitable trust. I accept and even expect them to go lower when I buy them. And just like with a sale at the store in the mall or Amazon Prime Day, I can't wait to be able to buy more at even better prices. Here's the bottom line. If you don't feel that way about a stock that you bought today that went down, if you now believe that you bought into a bubble, I cannot help you. Let the billionairestas scare you out of that same exact market that they made their money in. Maybe that's what they're there for. But for me, I'm trying to help you make money in individual stocks. And that only works if you believe in them enough to buy more when they inevitably pull back. Just be patient, be ready, and don't get downhearted. Don't feel that you've made the biggest mistake in your life because some talking head billionaire said, alas, the end is nigh.
All right, I hope you're all doing well today and staying calm in this market. Really quick, I want to talk about iron because we have some important news. I'm bullish on iron over the next 1 to 2 years, and I encourage you to research the company. Today, iron announced an $875 million convertible senior notes offering. Iron is essentially locking in long-term, lower-cost financing for its AI cloud build-out without immediately flooding the market with new shares. The notes cannot be converted into shares unless the share price rises above the conversion price. We'll have to wait probably a day or two for more details on the pricing to find out what the conversion price is. But this is likely going to result in Iron gaining access to low-interest debt to continue their AI build-out. In connection with Iron's note offering, Iron is entering into privately negotiated capped call transactions. This is very interesting because we could potentially see the conversion price notably higher than the current share price, meaning dilution may not happen unless the share price goes notably higher first. But again, we have to wait for those pricing details, which will likely be available in a day or two. Overall, I don't view this as a major negative for Iron, not at all. I'm viewing Iron as a long-term investment for the next 1 to 2 years, and I think there is more upside over that time. Iron is up about 100% since it was first mentioned on this channel about a month ago. I want you to realize that the stock has been moving higher due to a fundamental change of the business. This is not just another hype stock. While I'm bullish on the company over the next couple years, and I think the stock is going higher over that time, we need to be prepared for potential pullbacks along the way. And we need to remember that short-term pullbacks in the stock do not change the fundamental story of where this company is heading. Also, it is very important that you research Iron and have at least a basic understanding of the company so that when a pullback does occur, you're not scared out of your position due to a lack of knowledge about the company. There's a video of Iron's co-CEO posted on the channel that can serve as a nice starting point if you want to know more. Now let's cover today's NVIDIA news. Today, the information published an article claiming that Oracle lost $100 million renting NVIDIA GPUs. This is also why we saw many AI tech stocks trade lower midday today. As I have said many times on this channel, I'm hesitant to believe anything the information reports having to do with NVIDIA rumors given their track record on the subject. Today's article from the information seems to implicitly confirm that demand for NVIDIA chips is still extremely strong, but that there are questions regarding the timing and economics of Oracle's AI cloud build-out. The information claims Oracle is experiencing gross margins of 14% as they quickly ramp their AI cloud capacity, and that is substantially lower than their normal margin. I don't know how the information would even have access to that information, and Fox Business is reporting that their sources are telling them that the information article is off base and does not reflect the actual financials of Oracle's business. And so that is worth bearing in mind. Even if the article were true, it wouldn't be a major problem for NVIDIA. The article simply underscores that the phase 1 build-out by Oracle is capital intensive and putting pressure on margins as they are quickly ramping capacity. That does not mean demand for NVIDIA's products is faltering. Also today, Jensen spoke about Oracle saying, quote, "When you first ramp up a new technology, there's every possibility that you might not make money in the beginning, but over the life of the system, they'll be wonderfully profitable." And so again, the information article does not concern me. I continue to be bullish on NVIDIA long term, and I think we are still in the early stages of AI. AI demand is showing no signs of slowing down, and I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. We should also see certain sovereign AI deals show up either in NVIDIA's revenue or revenue guidance on their Q3 or Q4 reports. And Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration based on NVIDIA's Q3 guidance. Those are all reasons why I like the fundamental setup for NVIDIA through the remainder of this year and into 2026. Looking out further, I expect new use cases to continue to be developed, increasing the demand for compute even further. As new use cases are developed and mass adoption increases, more compute will be needed. I don't think we are anywhere near any type of bubble bursting type of event, and I think the recent talk about an AI bubble is largely overblown. While there are similarities between the AI revolution and the dot-com era, there are also fundamental differences in multiple key areas. First, the largest spenders have the deepest corporate balance sheets in the world. Second, the largest spenders are primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com bubble. Third, the largest spenders are not aimlessly investing in AI infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they're investing heavily to try and meet extremely strong demand from their paying customers. And fourth, new use case development and mass public adoption of the technology are going to happen much faster than they did during the early days of the internet because the internet is already here, making new use case development and mass public adoption immediately possible. This drastically reduces the risk of long digestion periods and overbuilds of capacity like what we saw during the early days of the internet. Could there eventually be an overbuild of capacity? Sure, it's possible, but I honestly think we are at least 3 to 5 years away from something like that happening if it happens at all. Jensen seems to agree with this, as he recently said on the BG Squared podcast that we should not hit a glut in demand for at least a few years. Additionally, NVIDIA has multiple large growth opportunities on the horizon that they are really just starting to capitalize on in a meaningful way, including sovereign AI, enterprise AI, AI native startups, physical AI, and quantum computing. These additional long-term growth opportunities and the effect that new use case development will have on demand for NVIDIA's products is not being adequately factored into most analysts' long-term estimates. Looking ahead, we have NVIDIA GTC in Washington, D.C. later this month, with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any sovereign AI initiatives with the U.S. government or large-scale projects with U.S. companies. I say this because Jensen usually announces large-scale projects that are unique to the region where the GTC event is held, and this event is being held in Washington, D.C. Jensen told us on NVIDIA's earnings call that he is anxious to share more details about Rubin with us at GTC. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.